the analogy being is that we are at the end of a multi-decade debt binge monetary supercycle. And global central banks and governments have been taking tail risk. They've been pushing tail risk into the future. They've been bringing returns to the present. And what's occurred is that people have imagined that they're destroying risk.
Right.
You can't destroy risk. They've simply transmuted that risk, and they've actually even amplified it. And I think the Cold War is an example of where you can have this competition and incredible tail risk that's being driven by low volatility. In today's market, we're sitting in a market where volatility persistence is at 88-year lows.
Yep.
You can actually measure that using something called a Garch model. I'm not going to get into that.
Okay.
But 88-year lows in volatility persistence. We have extremely low equity volatility, extremely high mean reversion. Stocks, as measured by enterprise value to EBITDA, are at, and price to sales and Case-Shiller PEs, are at levels that have triggered previous depressions.
Yeah, and beyond. Yeah, absolutely.
And beyond. Fixed income, bond yields are at the lowest levels in human civilization.
Yeah.
We've only moved debt from the corporate balance sheet to government balance sheets and sovereign balance sheets. And now sovereign debt are at the highest levels in really recorded modern history. And there's limits to the efficacy of central bank stimulus. And this is all occurring at a point where rising populism is potentially going to cause the post-Bretton Woods world order to come to a collapse. And this dynamic of the U.S. protecting trade lines and ensuring trade dynamics, and also protecting the world in terms of military in exchange while we export our inflation and export our middle class, this multi-decade dynamic is coming to an end as populism is rising in the developed world. It is a perfect storm. So there is massive tail risk under the surface, but it's being hidden by this competition of devaluation. The same in the same parallel that maybe the Cold War could be an analogy for. If Brexit and Trump are Bear Stearns, the breakup of the EU is really potentially Lehman.
Yeah.
And and that leads into a whole other realm of geopolitical risks, including potential war with Russia. And then we're not even including China and the financial state that Japan is. So these factors really come into play. This could be the tipping point, any one of these, and it could happen politically. At that point, we'll have to see if they can't print into value, do they freeze? And maybe bailing in is their next step on things. But I think this is where we will see, and that's why I think there needs to be sort of a coverage to both right and left tail risk in both the scenario. Vol is more than just protecting against a 50% decline in markets.